Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Chipotle Mexican Grill Inc. quarterly report. Chipotle Mexican Grill offers a variety of businesses and services including restaurant food sales, burritos, burrito bowls, quesadillas, tacos, salads, lifestyle bowls, kids meals, chips, sides, and drinks delivery services through its app and website operations in multiple countries. United States, Canada, France, Germany, Dubai, and the United Kingdom. The significant drop in Chipotle Mexican Grill Inc.'s stock price over the past year can be attributed to a combination of factors. Repeatedly lowered sales forecasts due to persistent macroeconomic pressures have led to a decline in customer traffic, particularly among younger consumers. Weak comparable restaurant sales, which dropped by 4% in Q2 2025 and only returned to 0.3% growth in Q3 2025, also contributed to the decline. Additionally, U.S. tariffs and inflation have impacted profit margins, while rising labor costs and consumer pushback on price increases have further exacerbated the issue. These factors collectively led to a substantial decrease of around -43.29% in Chipotle's stock price over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the increase in food and beverage revenue, new restaurant openings, and comparable restaurant sales increase. Additionally, the Chipotle Rewards program has led to deferred revenue recognition, contributing to overall revenue growth. On the other hand, revenue decline is mainly attributed to lower sales volumes, seasonal factors, and a decline in delivery service revenue. These factors have resulted in a decrease in revenue compared to the previous year. Net income and profit margins. A mixed picture. The financial summary reveals a mixed picture of net income and profit margins from 2024 to 2025. On one hand, net income increased by $2,483,000, or 0.21% for the year. However, this growth was not consistent across all periods. For the 9 months ended 2025, net income was up slightly, but it decreased for the 3 months ended 2025. Profit margins also showed a mixed trend. While they can be inferred to have increased in 2025 compared to 2024, there were slight changes in profit margin for the 9 and 3 months ended 2025. The effective income tax rate remained flat for the 9 months, but increased by 0.2% for the 3 months. The inconsistency in net income growth and profit margins suggests that the company's financial performance was affected by various factors during different periods of 2025. The company is generating a significant amount of positive operating cash flow, with net cash provided by operating activities increasing from $1.578 billion in 2024 to $1.688 billion in 2025. This increase demonstrates the company's ability to generate sufficient cash from its operations to meet ongoing capital expenditures and working capital requirements. The substantial cash provided by operating activities of $1.7 billion for the 9 months ended September 30, 2025, further supports this conclusion, indicating a strong financial position for the company. The company's debt level has experienced a substantial increase over the past year. According to financial reports, the debt level rose by 133% from $2.2 billion to $5.2 billion. Furthermore, cash used in financing activities surged from $735 million to $1.7 billion, indicating a significant escalation in borrowing and debt accumulation. These figures suggest that the company's interest expenses have likely increased as well, placing additional pressure on its financial performance. Management is optimistic about the company's future prospects. Key highlights include: the company plans to expand its operations by opening 38-22 new restaurants in 2025 and 2026, driven by a long-term growth model focused on key operating metrics. Despite anticipating comparable restaurant sales declines in the low single-digit range in 2025, management is confident in achieving positive cash flow for the foreseeable future. This will be achieved through efficient working capital management and commodity price risk mitigation strategies. The company aims to utilize its cash flow from operations for strategic purposes such as capital expenditures, share repurchases, restaurant investments, and general corporate uses. The company has made significant investments in share buybacks over the past year. In the 3 months ending September 30, 2025, a total of 686,000 $508 was spent on repurchasing shares. This trend continued throughout the 9-month period, with a total of $1,676,088 invested in buying back shares. Concerns about inventory buildup and supply chain disruption. Our company is facing concerns regarding inventory buildup and supply chain disruption. The data shows a significant increase in inventory of $2,408,000, indicating potential issues with managing stock levels. Furthermore, intermittent supply shortages have been reported due to rapid expansion and existing supply chain disruptions. These challenges are also attributed to our commitment to the food with integrity philosophy, which may be impacting our ability to maintain a stable supply chain. That concludes the financial summary for Chipotle Mexican Grill Inc. Feel free to comment below, and I will be happy to answer them when possible.